And good morning, good evening, good afternoon, traders and students all around the world. This is FXPassion broadcasting you live on YouTube, and this is Forex Trading Course 101. Remember, trading is a learnable skill when we learn in the correct way the three pillars. What are the three pillars? The MST. Okay, M stands for the market. We need to learn about the market, how the market works. S stands for strategy. We need to learn how strategy works inside the market. And the big one, right? We need to learn about ourselves as traders. Okay, those are the three pillars, everybody. You cannot make consistent profits and being a professional trader without the three of them, all of them. Oh, I learned about the market but not the strategy. It doesn't work. I learned about the trader and the strategy but not about the market. Doesn't work. Okay, we need to learn, and it's going to take some time, about the three of them. And we're trying to do this with all modules here, right? Basic module, beginner module, intermediate module, advanced module. What about the professional one? Professional is in the advanced, not in the advanced, but in the Forex course 202 is the advanced one. And talking about traders, what do champion traders always say? I am not going to live and die on a trade by trade basis. And of course, this is a quote from Mark Douglas, right? Oh, I'm a winner. It doesn't matter. Why not? It's just one trade. Oh, I'm a loser. Doesn't matter. Why not? Because it's just one trade. Champion traders, you know, we don't live on a trade by trade basis. And somebody was asking me the other day, Passion, if I don't live and die on a trade by trade basis, then what? Great question. We are living and dying on a sets of hundreds. Oh, different perspective, right? Sets of hundreds. Anyway, my 50 cents in here: when the market scares the hell out of you, don't be afraid to do the right thing. What is the right thing? You lost 7, well, welcome to the club, you have 93 to go. Sets of hundreds, everybody. Professional traders understand these sets of hundreds. Anyway, remember, 90% of traders lose money in the Forex market worldwide. The webinars are not trading and investment advice. And for homeworks or questions, you have my Gmail contact, my Skype contact, and you can follow me on TradingView. That being said, remember, those webinars are not trading or investment advice, especially in this Forex trading week. Okay, when the Forex trading week is on, we are trying to implement what we have learned so far in the live market. So we are trying to implement those two modules in order to have a greater chance. Market structure, highs and lows, trends, trend line, support, resistance, pivot points, and lastly was candlestick formations. That being said, yesterday we were talking about Euro JPY, right? Euro JPY. Tell me, everybody, who is happy in here? Who is happy going long on Euro JPY? And don't be shy. Are you happy going long on Euro JPY? You know, what a question, right? Well, yesterday we concluded that this is a 50% trade, and some of you might be, you know, because the market is going in our way, some of you might be like, woohoo, I know, you know, I was right. I was right. Don't get caught in this kind of thinking. Okay? This is still, why not? This is still a 50% trade. Okay? Probability, it's not. So maybe the most important thing you should have learned yesterday, everybody, is that probability is not subjective. It's mathematical. 1 plus 1 plus 1, you know, The good stuff and the bad stuff. Who is winning, the good stuff or the bad stuff? And yesterday we concluded that it's 50-50. So it's normal behavior between beginners, thinking, oh, I was right. Well, guess what? The market doesn't care. The market doesn't care how intelligent you are, what schools did you went to, what is your age, color, race, religion. The market doesn't care. Okay? So don't get caught and think, oh, I was right, oh, Yahoo, the market is going in my way. Because this is still a 50% trade, everybody. Do you understand this? Why? Because there is something called in the market, it's called random distribution between the winners and the losers. And beginner traders, you are not listening to me when we talk about random distribution. And I'm not judging you. This was me back in time too. This is common behavior between the beginner trader. I was right. Or the market didn't do so. I'm not going to say I was wrong. I'm going to say the market didn't do what I thought about, right? So what is random distribution? Random distribution, one more time, means that my kids that are 4, 5, 6 years old can click the mouse and enter at the exact same place that a professional trader is going to enter, and they can win. Does this trade, does this make them professional traders? What's the answer? What's the answer? No, right? Of course not. So don't get caught, everybody, in this kind of thinking. Journal. I should not personalize winners and losers. Oh, I was right, I'm long, I'm right. It's a 50% rate. Right? One more. Do you want to see one? So from this here, yeah, right? NZD cat. From this here, NZD cat, weekly chart, whatever. When the market broke. So talking about the market wave, when the market broke, the market wave, extension, retracement, extension, retracement, extension, when the market broke the market wave, and I was telling everybody, don't go long in here, don't go long in here, because, hello MHB, don't go long, just because you have an eventual winner because of random distribution. Okay, this one more time, what is the thinking? I was right. I was telling here too, so this is the beginner trader's dilemma, right? So starting from here, starting from this level of, and remember, we don't have the crystal ball, so starting from this level of past resistance, I was telling some traders, don't go long, and the beginner trader, oh, but the market's making higher highs, higher lows, right? And I'm telling everybody, follow the rules, don't go long anymore, we are in a no trade zone. And sure enough, some beginner traders went long and they won. Passion, you don't know what you are talking about. And me again, don't go long. And sure enough, because they had the occasional winner, not respecting the rules, not respecting the concepts. And I was the boring one, right? And I was telling, don't go long, And they went long again on the 15-minute chart, 1-hour chart, and they won again. And guess what? When the market broke the higher high, I mean the relevant high, when the market broke the relevant high of the wave, some of the courageous ones sent me emails, called me on Skype, you know, and the conversation went, Passion, I was right, you were wrong. And I said, And I again, don't go long, you know. They won 2 times on the 15-minute chart, 1-hour chart, 2-hour chart, whatever. And I was telling them, don't go long. And sure enough, the market broke the relevant high and they were happy, right? I'm not judging anybody. This is how it's normal behavior. And I was telling them, don't go long. And they were looking at me, Passion, you are wrong, I am right, you know? So the ego kicked in, and because they had 2 winners and the market broke the relevant high, they went long again. And they finally lost. And because they were right and I was wrong, and they lost, guess what happened next? Again, a common behavior called revenge trading. And I was telling her, don't go long, don't go long. And sure enough, they went long again. Some of them won, most of them lost again. And the one who won here, they went long again here. So, in conclusion, what is the bottom line, everybody? You know, when you are in a 50% rate or 20% rate or 30% rate and the market goes into your favor, don't pay very close attention to your what are you thinking. Don't get caught in, oh, I was right. When you say I was right, you are personalizing winners and losers, and you are most likely, everybody, not do this process. You know, you are not going to train yourself, you are not going to train your brain to do this process. What is the process? Probability is not subjective. You know, it's plus 1, 1, plus 1, plus 1, plus 1. How many good news you have? And 1 plus 1 plus 1, how many bad news you have? You know? We can still win. Yes, sir, we can still win. But it doesn't change the fact that you are not going to trade in my hedge fund. Passion, can I trade with you or for you? Absolutely not. Why not? Come on, you are entering 50% trades, for God's sakes. Or 30%. Oh, but I won. It doesn't matter. It doesn't matter. I mean, look at the conversation. Can I work for you? No, you can't. But I won 5 trades. Those were 30% probability. Those are 50%. But I won 5. Well, you have 95 to go. Trading is a business, everybody. 1, 2, 3, 4, 5, 20 trades means nothing in this profession. Passion, I don't believe you. Well, find an institution in your city, okay? Find an investment bank, find a broker, find a hedge fund and ask them, you know, dear broker, how do you make or how do you count profits? You know, knock on the door and tell them, I'm Gianpaolo and I made I have 5 winners, can I trade for you? Right? I know. You know, you don't want to hear this, do you? You know, you want to live in your dream house, right? And we all live in our dreamland as beginner traders. You know, that in 1 year I'm going to be a millionaire. You won't. And I'm, oh, you are a bad teacher. I'm honest. I'm just honest. Passion, I don't believe you. Look around, talk to your friends, and ask them. You know, John, are you a millionaire after 1 year? No. Jane, are you a millionaire after 2 years? No. Gianpaolo, are you a millionaire after 2 years? No. Alex, are you a millionaire after 2 years? No. Marina, are you a millionaire after 3 years? No. See, everybody, this is the reality of this job, this profession. And after the usual sermon, everybody type in the chat the currency pair that you want to check. Remember, I have a 20 seconds delay on the chat. First comes, first is served. Okay? We are trying to make sense of our winners, our losers. We are here to learn. Type in the chat a currency pair, your position, long or short, and the time frame. Don't be shy. We are here to learn. There is no right or wrong. Okay, and in the meantime, let's open nothing here. So let's open what? Canada JPY, Euro GBP, huh? What do you say, everybody? Euro GBP monthly chart, right? Euro GBP monthly chart. So we're trying to implement what we have learned so far, right? We have the upper band, we have the lower band, and this market is so far is sideways. This is the trading range, no brainer. Euro GBP, it's really an easy currency pair to trade if you obey the rules, right? So Euro GBP, everybody, we are here, we want to make pips and money this week. How would you trade this? Let's make a poll. Number 1, do you want to go long or short? Number 2, on what time frame? So number 1, long or short? Number 2, what time frame? Number 3, what pattern? Number 4, where the stop loss? See, everybody, it's always the same. Number 5, what is the probability? Okay, don't be shy, there is no right or wrong. You can go long, you can go short, you can stay out too. Okay, you can stay out too, no problem. So how would you trade this one? Let's make a poll. There is no right or wrong. Somebody can go short, somebody is going to go long, somebody is going to stay out, right? And if you like these webinars, please give it a thumb up so we can continue with the project. It's for free, it's on YouTube. And if you don't like, please be honest. Of course, we are here to learn, you know. Thumb down, why not, right? Teacher MHB, Euro GBP, long or short? Teacher Tari, Euro GBP, long or short? Teacher Hosnaini, long or short? Teacher Douglas, long or short? Teacher Lucas, long or short? Teacher Aske, long or short? Oh, I'm scared of you because you are going to give me a sermon again. Come on, everybody, you know, I'm here to help, right? You know. Remember, I have a 20 seconds delay on the chat. First comes, first is served. Thank you very much for the thumb up. You can be honest, we accept thumb down too, right? So long or short on Euro GBP monthly chart or Euro GBP, you can change to the weekly chart, daily chart, you know, whatever chart, is still the same question. I have a question on the other streaming platform, everybody. You're not going to see this on YouTube. Can you draw the market wave on Euro GBP? Great question, everybody. So the market wave and the Fibonacci's don't work when it comes to consolidation. Okay? Why not? Because this is the trading pattern right now, so far. One day maybe this market is going to break the consolidation or down, or the market one day is going to break the consolidation going up. Euro GBP, AUD NZD, everybody, and USD CHF, you know, those currency pairs from the monthly chart are sideways, are in consolidation, you know, so the market wave is not going to work. See what happened here, everybody? You know, extension. What happened with the retracement? The retracement broke the extension, right? Oh, we are in an up market wave. Market wave doesn't work in a sideways channel. Thank you for the comment. Great question. You know, the market wave doesn't work in a sideways channel. Fibonacci's too. Don't put your Fibonacci on USD CHF. Okay, so let's make a poll. Who in here wants to go long? Okay, and talking about different levels, right? We have one more, maybe in here. Tell me, everybody. Okay, and talking about candlestick formations, right? If I go long right now, and if I put my stop loss down in here, you know, and if I lose, did I do anything wrong? I'm going long in here, so I'm trading the range. So this would be the stop loss level, you know, this would be the take profit level, 1 to 1.8. So if I enter the market and if I lose, did I do anything wrong? Yes or no? You can do this on any time frame. Okay? Sure, any time frame. But here is the question, you know, if I do this kind of stuff, you know, compared to this one, still the same question, right? What is the probability of this trade being a success? Make sense? So what I'm going to do, I'm going to long or short. I'm going to go long, okay, right now. So come on, buy market. I'm not going to waste time, everybody, to calculating the lots, the volume, but I'm going to risk 0.5%. Okay, order filled, we are in the market, and I'm going to put my stop loss 8200, 0.8200, right? Submit. Okay, and I'm going to readjust my stop loss. There you go. Submit orders and add take profit 0.9100. Submit. Okay, so I'm going to almost somewhere like in here. Okay, so long or short, we are long. What time frame? The weekly time frame. What pattern? It's just an example. Sure, it's just an example. What pattern? The monthly, weekly bands. Where is the stop loss? Well, those are the rules. Everybody, every time we start the lessons, follow the rules. What is the right thing to do? If we are trading the consolidation range, the stop loss should go above or below the consolidation range. Make sense? And here we go. What is the probability? Okay, let's zoom in. Oh, but I'm not trading on the weekly chart. We are using the weekly, monthly, and daily chart, everybody. You know, just to teach you, because those charts don't move. But it's the thinking process that matters. The same way that you're approaching Euro GBP on the weekly chart, you are approaching Canada JPY, Euro dollar on the 15-minute chart. Long or short, what time frame, what pattern, where the stop loss, what is the probability? Okay? So help me out here. What do you think? What are the pros and what are the cons of this trade? Let's see. So let me see here, pros here, and here again, edit label, cons. Everybody, I'm not sure, can you type anything in the chat? Somebody's saying I'm trying to put something in the chat and the chat doesn't work. Everybody, is the chat working? MHB, hello boss. MHB, is the chat working? Someone from the other streaming platform is saying the chat is not working. On YouTube, well, I'm not a tech guy, everybody. I don't know what to tell you. You know? Is the chat working, everybody? And remember, I have a 20 seconds delay. Please type in the chat, everybody. Can you hear my voice, see my screen? So, if you would be so kind, everybody, please confirm in the chat. Yes, I can hear your voice. Yes, I can see the screen. And hopefully I can put something in the chat. Chat not working. Let me see. Hello. I don't know, everybody. For me, it's working. Not working for you? Yes, I hear you. Okay, thank you very much. So, can you see? Learn to trade. Yes, sir. Thank you very much. So, everybody, what are the pros and the cons? Pros, the things that are good. Cons, the things that are not good. Thank you very much. S, thank you very much. Learn to trade. Right? So, what is the good news? Well, pros. Right? We are at PP, stands for pivot point, double bottom. So I have two reasons to go long, right? We are at the pivot point. We learned about pivot points in the previous lessons. Passion, what is a pivot point? Please go back to Dukascopy YouTube webinar page and start to watch lesson number 1, what is market structure. Okay. Not sure if it's a pivot point. Okay, so we are at the pivot point, double bottom so far. What is against me? Well, the market didn't touch the lower band. Market didn't touch lower band. And something is happening in the market, everybody. When my dog is barking, something is happening in the market. Market didn't touch the lower band, right? So maybe I'm premature and maybe the market is going to go down, touch the lower band before it goes up. Why not, right? Well, we are looking back at history and this might be the case. So what else is with me, right? Let me see. Candlestick formation, very good. What about the trend lines, right? Short-term trend lines. Well, the long-term doesn't work in a sideways movement, so in a consolidation, and let me see, lower low, right? So we are here, okay, and the market broke the short-term trend line. Full body candle closed on the other side. So market broke the short-term trend line, STTL, and text, candlestick formations, bullish candlestick formation to go long, right? Okay, what against me? Market didn't touch the lower band, it can still fall, right? What else is against me? The market didn't make a relevant high. Market did not make a relevant high. What does this mean? This means that the market didn't break this one. So we don't have the short-term trend yet, agreed? We don't have the short-term trend yet, at least not from the monthly, but as you can see, I cannot trade this market with the short-term trend from the weekly chart. Why not? Because I'm going to lose the opportunity. Look in here what happened. See everybody? Euro GBP weekly chart. The market touched the lower band, the black one, and then it just shoots straight up. There are no higher highs, higher lows in here. See everybody? There are no higher highs, higher lows. It just went up. So some techniques and some tools, you know, are better for one behavior and not good for the other. So do you see anything else, everybody, that is against me? So we're in a trade, right? We have the stop loss down in here, we have the take profit up in here. What else can we see? Well, support resistance not relevant because the market is ranging from one band to another. Okay, everybody? Support resistance doesn't apply to the range. Not relevant. Oh yes, but the other guy on YouTube is the other guy on YouTube. Okay, you can accept what we are teaching you, you can reject what we are teaching you, not a problem. So 1, 2, 3, market didn't touch the lower band yet, market didn't make a relevant high. What else is against me? Candlesticks, no. Resistance, support, no. What else? I think this is it, right? Tell me everybody, is this a high probability trade or is this a low probability trade? And remember, there is no right or wrong. And if this is your first time with us, everybody, yesterday going long on Euro JPY in here, we concluded that 1 plus 1 plus 1 equals 3 and 1 plus 1 plus 1 equals 3. So we have 3 reasons to go long and 3 reasons to not to go long. This is a 50% trade. Yes, we are going to learn more stuff, but so far this is the thinking process, everybody. Yes, but the Fibonacci and the stochastic and the MACD, we are not there yet. So we can address the probability of this trade only from what we know so far. So if you have the equal number, this would be a 50% rate. And if you're using the same logic, right? What is the probability? It's high, low, big, not too big, more or less. What do you think, teacher MHB, teacher S, teacher learn to trade? What do you think? Is this a good trade? Talking about probability, bad trade? Would you go long on this trade, everybody? Don't be shy, there is no right or wrong. Would you enter this trade? You can say yes, I would enter. You can say no, I would not enter. You can say I prefer to stay out. You can say I don't like Euro GBP. Fair answer, why not? We don't need to trade everything, right? Lucas says 50%. Well, no. In order to be 50%, you need to have the same number of good news and bad news. So the answer is no, it's not 50%. You have 3 reasons to go long, and you have 2 reasons not to go long. So it cannot be 50%. And remember, everybody, that of course, talking about probabilities, there are no 100% trades, right? Okay, there are no 100% trades. So I have a question on the other streaming platform, everybody. Passion, how are you making the calculation on the probability? Great question. So because we don't have, everybody, because we don't have 100%, right? 100%, this would mean guaranteed. We don't have 100%, so what we're going to do, we are going to use 90, okay? And we're going to divide 90 by the reasons, by the number of the reasons. So if I have 3 reasons to go long, then I'm going to 90 divided 3. So it's 30, right? Every reason equals to 30%. So 30 plus 30 plus 30 gives me a 90% probability on the good side, not in general, on the good side to go long. Right? And see, everybody, I have 2 reasons not to go long. So what I'm going to do, I'm going to use the same calculation. Okay, I'm going to say 90 divided, how much? 2 or 3? $90 divided 2 or 3, everybody, come on, stay with me. This is common sense. 90 divided 3 or 90 divided 2? Somebody's asking, how do you make the calculation on the probability side? You're going to use 90%. Why? Because there is no 100% rates, and you're going to divide with the number of the reasons to go, to enter into the market and not to enter into the market. So on the good side we have 90 divided 3, it's 30%. So 30 plus 30 plus 30 makes 90%. Lucas says 2, yes sir. So 90 divided 2 is 45, right? Now here you go, right? It's the same. And you go here and you go 45 plus 45 equals 90. Right? What do you say, Lucas? Is the number 2 the correct answer? What do you say? See, everybody, is the 2, I'm tricking you, is what Lucas said the correct? Well, this is the same, so it's 50-50. No, it's not. Come on, everybody. So one more, right? And the answer is yes. So now in the last phase, we need to detract, right? One from the other. Make sense? Passion, I don't understand. I know I'm joking with you, everybody. Should we divide 90 with 2? Because if you say yes, then it's going to be, you have 3 reasons, right? 30 plus 30 plus 30 minus 45 minus 45, and you come to 0. It's a 50-50 trade. Come on, everybody, stay with me. What's the number? How to do this calculation of probabilities? Okay. Please give us the answer. Okay, this is a technique. You know, we have many ways to go. This is one. Oh my gosh, Bitcoin is rising up. The dog is getting crazy. So in the next phase, what we are going to do, we are going to 45 minus 30 equals 15, and 15 is the number we are going to subtract from the total on the left side. I hope it's clear, everybody, what we're going to do. Okay, so next phase, 30 minus 30 is 15. 15 is the number we are going to subtract from the total on the left side. So in conclusion, not to waste too much time, it's going to be 90 minus 15 equals to 60. So this is a 60% rate. I think about 54 pros, 36. You were near. You were near. There are different models, everybody, how to make the calculation. Okay, but this model is we need to subtract from the, because it's a numbers game. If you would have 5, okay, then this number would be lower. Agreed? Okay, there is no right or wrong. We have different models. Anyway, everybody, this trade is 60% right now to go long. Okay, 60%. Now, what happens if the market goes down in here and touches the lower band? How much is going to be this trade, everybody? According to the same logic, how much is going to be this trade if it touches the lower band? So market didn't touch the lower band, goes here, right? So you would have 1, 2, 3, 4 reasons to go. 1, 2, 3, 4 reasons to go long and 1 not to go long. What's the probability? Passion, why don't we I have a question on the other streaming platform. Passion, why don't we compound all them together and divide with the same number? Well, I never tried this one, to be honest. So 1, 2, 3, 4, 5, right? So it's 90 divided 5, it's 18, so 18 times 4 equals 70. It doesn't work because you need to subtract. Great question, everybody. So it doesn't work, see? You know, it's 72 minus 18. I need to subtract the con. Gives you a 54. So the number should be higher. Okay? So same logic applies, right? 90 divided 1, 2, 3, 4. 90 divided 4 equals to 2.5. Right? So it's 2.5, so it's 90, and now we have a problem because 90 divided 1. It's 90, right? Well, we have another approach, so it's 80% trade, right? Can you understand this, everybody, or is this too complex? Lucas, 72. Excellent. Yes, sir. How did you come to this number? Passion, I don't like math. Okay, let's not waste time, everybody, okay? Just bear in mind, this is maybe the most important thing today and yesterday. When we enter the market, we are talking about probabilities. Okay? Yes, we have different models, you know, you can check online, the one that it's understandable. Okay, how to calculate probabilities between the pros and the cons. You have different models, everybody. Make sense? No, you cannot mix them. You know? Or if you say, well, everything is 20%, right? It's so from 100 standpoint, everybody, you know, from 100 standpoint, if you have 3 reasons, somebody saying, well, if you would go with the 100, you would have the same number and this equation works. You know, so if you start with the 100 and you have 3 reasons to go long and 2 reasons not to go long and everything is 20, then you can still come to 60%, right? Because 20 plus 20 is 40, plus 20 is 60. And here 20 plus 20 is 40, so 100 minus 40 is 60. But I'm telling you, you cannot use 100 as a number base. Why not? Because there is no 100% rate. MHB says total is 90. If 2 points against them, the subtract 90, 35, otherwise 72. Exactly, this is the way to go. Yes, sir. Lucas says, should we enter again when they touch the bottom? Great question. What do you think? What do you think? Everybody, this is the lesson, you know, trade the high probability trades. What does this mean? Don't enter 50% rates. Oh, but the market is going up. Well, it's still a 50% trade, everybody. You know, it's still a 50% rate. And this one, let me see if I can go. I cannot go back that much. What do you say? Should we enter again when the market touched the bottom? Well, what if, so here is the question for the beginner trader. Let's say that you don't want to enter this trade for whatever reason and the market is not falling down. Then what? How would you explain this to your boss? In a hedge fund or investment bank or a brokerage house, whatever. The boss is going to call you in and is going to ask you, John, Jane, why didn't you enter Euro GBP? As the FXPassion guy just entered. Why are you going to tell your boss? Right? What is the answer? Lucas. Lucas, MHB is your boss and he's calling you into his office and he's asking you, Trader Lucas, why didn't you go long on Euro GBP today, 7th of September 2021? Consider that you have double bottom, market broke the short-term trend line, you have bullish candlestick formations, and the market didn't touch the lower band, and the market didn't make yet the relevant high. What are you going to tell your boss? Everybody. And understand this, everybody, you cannot, in an institution, you cannot say to your boss, well, I don't know. This is a retail trader dilemma. You know, I'm asking my students, why didn't you do this? Teacher, I don't know. Well, you cannot answer this to a boss in an institution. I'm sorry. Passion, teach me how to be a profitable trader. Easy answer. Model institutional traders. Oh, see? You cannot say to your boss in an investment bank, oh, I don't know. Because he's going to tell you, you are fired. I'm sorry, you are fired. Oh, yes, but what? Why didn't you enter Euro GBP? It's a simple question. Really? And you can say, well, but the market didn't make a relevant high and the market didn't touch the lower band. And he's going to say, well, okay. What about you have a double bottom? You have a pivot point. The market broke the short-term trend line and you have bullish candlestick formations. Same question again. Why didn't you enter this trade? And there is only one specific answer that is acceptable. Which one is this? Who is that smart, everybody? Which one is this? Who is that smart? Who is that smart, everybody? Passion, do you have any other model in mind? Well, talking about probability, you can also divide everything as MHB says, divide everything by 90. So you have 1, 2, 3, 4, 5, 6, right? Okay, not to get too complex, you have 90 divided 6. Because you have 6 reasons, 4 to go up and 2 not to go up. Okay, this would be another way. There are, everybody, one more time, there are different models. Okay, you have 6 reasons. Pivot point 1, double bottom 2, market broke the trend line 3, bullish candlestick formation 4, no relevant high 5, market didn't touch the lower band 6. So 90 divided 6 gives you 15. And then you're going to count 15 plus 15 plus 15 plus 15, it's 60. But you cannot subtract then. You just say, okay, so it's a 60% rate. Right? This might be a better, easier way to go, because when the market touches the band, right? If the market touches the band, then you can go 15 plus 15 plus 15 plus 15 plus 15. 1, 2, 3, 4, 5. 5 times 15 gives you 70%. Make sense? There are different models. This is the easy one. But then you cannot subtract here. Probability is not in our way, that's why. Not true. Not true. Not true, MHB. You have 4 reasons to go long and 2 reasons not to go long. How probability is not in our way? Thank you for the comment, but not true. Everybody, there is only one reason you can say to your boss in an institution that you didn't go long. And this answer is, Teacher Tari, are you here? Let's see if Teacher Tari is here. Tari knows the answer. Teacher Tari, Teacher Stoyan, are you here? We have 4 more minutes. Okay, everybody, we need to speed up. We are almost over. So the only one reason that your boss is going to accept is, you know, John, Jane, why didn't you go long on Euro GBP? Because my strategy didn't allow me to. Because the entry, the setup was not according to the rules of my strategy. And let's see, you know, let's play around just to stochastic. See, everybody? It's just an easy example. If you would have a strategy and you are saying, well, before you go long, stochastic, just an example, must be or should be in the buy zone, and your boss is asking you, well, why didn't you go long? Because the FXPassion guy did. You would say, well, this setup, this entry was not part of my strategy. What do you mean? Well, the stochastic was in the sell zone, not in the buy zone. This is the only way an institutional manager would accept your answer. Otherwise, Passion, are you talking from experience? What do you think? You know, I had my, I don't know if I'm going to say this correct in English, I had my ears pushed 1 or 2 times, 3 times from the managers. Why didn't you do this? Well, and was blah 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 excuses. First warning, on the next one you are out. Oh yes, but I don't want to hear it, you are here to trade. You have your strategy, you have the charting software, you have the platform, your job is to make money. Yes, but I don't want to hear it, said my manager back in time. See, everybody? Somebody asked on the other platform, okay, teach me how to make money. Model institutional traders. This is how. We are not talking much, right? But when we say 90% of traders lose money in the Forex market, everybody, we are talking about retail traders, not institutional ones. Institutional traders are performing differently. It's not a conversation about good or bad or better, you know. But a retail trader can say to a coach or a teacher, why didn't you enter here? A retail trader can say, well, I don't know. An institutional trader, a junior trader in an institution cannot say this to the manager. I mean, it cannot say, of course it can, but, you know, first warning, second warning, you are fired. It's that simple. Okay, everybody, thank you for your time. See you back tomorrow with another Forex trading weekday. Until tomorrow, stay strong and trade with passion. This is FXPassion signing off.